right, good morning and a happy Monday. We're looking live at the New York Stock Exchange and the NASDAQ market site to start the week. I'm Myles Udland here in for Brian Sazi, who is on assignment. We've got Genpact ringing the bell at the NYSE and the USTA Foundation at the NASDAQ US Open, wrapping up yesterday afternoon out in Flushing as we get set for the trading day here in the bells. Both uptown and downtown, midtown and downtown here. Coming up on Opening Bid, we've got you covered on the biggest investing stories and themes for the day and the week. But first, let's get a quick check on the markets with Yahoo Finance's Ali Canal, who is standing by at the NASDAQ in Times Square. Ali.
Hi, Myles. Yeah, I'm taking a look at markets opening essentially flat for the Dow and the tech-heavy NASDAQ composite. The S&P 500 is up around 0.2%, and this comes as traders are really assessing what we saw last week from that disappointing jobs report, those revisions really spooking investors. Just 22,000 jobs added during the month of August. We are going to see those estimates for annual benchmark revisions tomorrow, so that could create a little bit more volatility, but of course, this all sets us up for what the Fed will do later this month when it comes to interest rates. And for now, markets are pricing in with near certainty that the Fed cuts by 25 basis points. If you take a look at some of the top trending stocks today, you're going to see Robinhood at the top of that list. Robinhood is going to be added to the S&P 500 as part of their quarterly rebalancing. You are seeing shares open up around 11% higher this morning. This is one stock that we'll be talking about throughout the show today. I also want to take a look at EchoStar Corporation. This is up a whopping 25%, and this comes after Elon Musk's SpaceX is really stepping in to rescue this company, agreeing to pay $17 billion for its wireless spectrum and cover $2 billion in debt payments. So this is really a lifeline for this company as it struggles to shift from pay TV to wireless here. But overall, looking at a mixed day on Wall Street for now. We'll see if we can climb back from some of the lows that we saw to end last week's session and get back to some of those record highs here, Myles.
All right, Ali, thanks for that update. All right, we're kicking things off with a look at some of the biggest stories and themes driving markets as we get the trading week underway. Number one, inflation data out Thursday will give investors another key reading on the state of the U.S. economy after that jobs report Ali just discussed disappointed. The August CPI data should show inflation moving even further away from the Fed's 2% target. Combine that with a slowing labor market, and you've once again got people saying the most dangerous word in economics, and that's stagflation. Number two, gold. Gold is trading at an all-time high. We're closing in on $3,700 an ounce, and gold is now up over 40% this year alone. Now, U.S. stocks are at records, but the safe haven trade has been out in full force this year. We'll discuss what could be next for the yellow metal and perhaps a way to play this rally. And number three, all eyes are on the Fed, but have enough investor eyes been on the housing market? We'll talk about the stealth breakout we've seen in housing stocks and another way to play this turn in the economic cycle. Joining me now to discuss is Larry Tentarelli, Chief Technical Strategist at the Blue Chip Daily Report, alongside Yahoo Finance senior reporters Inez Ferre and Ali Canal. So, Larry, I want to start with you talking a little bit about that jobs report that Ali was just discussing, and also that reaction we saw from the market on Friday. We initially saw that rally, traders getting very excited about the certainty, really, of Fed cuts that we're going to get starting in just a couple of weeks. Some of the enthusiasm faded. I'm just curious how you thought about that action we saw Friday and carrying into what's kind of a mixed open, as Ali was just mentioning here, to start the week.
Good morning, Myles. In the near term, we should expect higher volatility around any news events. But I think overall it's bullish because what happened on Friday is with that very weak jobs report, it's really cemented a Fed rate cut coming next week. And although September is historically very volatile, I think that these Fed rate cut expectations are probably going to put a floor in volatility. And we're seeing rotation into some of these rate cut trades, home builders, gold miners, small caps. So net, I think the weak jobs report is going to be a positive.
Ali, you are our inflation expert here, our inflation specialist here at Yahoo Finance. Can we talk a little bit about the expectations for that number on Thursday? And I think this dynamic around everything seemed okay on the inflation front as we got through the first, let's call it the spring, kind of around Liberation Day. And looking at the forecast for Thursday, all of a sudden it feels like just as Jay Powell comes out at Jackson Hole and says the labor market is my number one problem, he now has a more material problem on the inflation side of the mandate.
Right, it's the tension of the Fed's dual mandate that a lot of strategists have been discussing. And if we look at expectations, we are expected to be firmer across the board, with core in particular. And what we saw earlier this year was that decelerating services inflation was offsetting some of the price increases that we were seeing on the goods side. And remember, when Trump put in those tariffs, that was flowing through into goods. Now, we didn't see that as aggressive as perhaps Wall Street strategists had initially forecasted. However, we did see a little bit of firmer prices. But again, because services were coming down, that really didn't show up too badly in consumer prices. However, last month, we did see that reversal where services inflation was a bit more sticky. And that was a top concern from economists, because if we move through the rest of this year and we see services come in hotter, that's going to be a problem for the Fed, because that suggests that there is possibly something a little bit more sinister going on underneath the surface of the economy, because that is not directly tied to tariffs. You would more so see that on the good side. So that's something that traders will be watching very closely. How sticky is core inflation? Are we seeing that reacceleration on the services side? So that's everything that investors are keeping an eye out, because there is that tension of the Fed's dual mandate as they really decide on how quickly they're going to cut rates. I do think the expectation for a cut in a couple of weeks is pretty much done at this point, a done deal, I should say. But later this year, that is a big question. How much more aggressive will the Fed be, and how many more cuts will we see to close out 2025?
Yeah, the Fed's in a blackout this week, so we won't hear from any Fed officials. But, Friday we kind of left it at, will it be 50 or 25 come on the 17th? So we'll see how much we can, kill time amongst one another in the next 10 days on that one. Inez, related to that inflation trade, I want to talk a little bit about what we've seen in gold. As we mentioned, gold at a record high this morning. We're closing in on $3,700 an ounce. I know this is a space that you follow closely. You've talked to a lot of folks within that space. And, I think that gold has now kind of gotten into this place where we discussed, Bitcoin, and Bitcoin is a very interesting part, of that haven trade, where it fits into portfolios. But it really overshadowed gold as the old-fashioned portfolio hedge, and it is certainly in vogue. And I'm just curious, given folks you've talked to and the way you're looking at the space, how you see the setup for that trade, one that's certainly worked tremendously well if you were long gold, certainly in 2025.
Yeah, most certainly. And look, the soft labor data that came out just supported the prices, really, because the market is expecting a Fed rate cut. But nonetheless, you are seeing that central banks have been buying up gold. People's Bank of China in August bought gold again. So for the 10th consecutive month, you've had the People's Bank of China buying gold. Central banks are expected to continue to buy gold. And that's been sort of a structural change. So unless you see the dollar rising substantially, Wall Street is still expecting that you're going to have easing monetary policy, and you have this structural change with central banks that are continuing to buy gold. And then you even have some calls. Goldman Sachs has a bullish call for 2026, for the end of 2026. In an upward risk scenario, you could see gold going to $5,000 an ounce, because they're saying you may have even private investors sort of shifting away from U.S. Treasuries into gold as well. So Wall Street remains bullish into 2026 for gold prices.
Larry, I want to get your thoughts here on gold, not just the rally we've seen in the commodity itself, but I know there's a couple names, or at least one name that you're looking at as a way to play that trade inside the stock market.
Sure. Gold is very strong, breaking out to new all-time highs. It just consolidated for about 4 months. And I agree with the bullish case of fiscal deficit problems. We've got a weaker dollar. And the gold miners in particular have been very strong and have started to surpass gold in year-to-date performance. So Newmont Mining is a standout in that sector. Newmont Mining is the largest market cap gold miner in the markets. They're also the only gold miner in the S&P 500. And what we saw to start the year was gold really outperformed the gold miners. But then a few months ago, there was a rotation into the gold miners as a catch-up trade. And gold miners are one of my favorite ideas here because they really work into the Fed easing cycle, and they're not really tied to the U.S. consumer. So if we get weak jobs data for a few reports in a row, then some of the consumer stocks like small caps, banks, they could see some volatility. But one of the benefits of gold and gold miners is they're really not tied to the consumer at all.
And Larry, I'm curious just on the price of gold itself, the commodity itself. When you look at that kind of a chart, the move we've seen, the breakout we've seen from really what to my eye looks like a multi-year base, how you think about that from a technical standpoint? Because again, I think people see, asset X is up 40% this year. They're like, oh, how much further could it go? What does the chart look like to you at this point in time?
The first target on the chart right now is 4,000. And that's based on the 4-month consolidation that we recently broke out of. So the trajectory for gold is very high. And if you look back over the past 20 or 30 years, when gold consolidates for a long period of time, when it breaks out, it generally has a very sharp, prolonged breakout. So although a lot of people will look at new highs and the question is how far can they go, a lot of institutional investors will look at new highs as a bullish signal and continue to buy. And that's my view. So I would look for 4,000 going into the middle of 2026.
All right, now, Ali, I want to talk a little bit about something else that's near record highs, which is the stock market. Mentioned that at the top. And I know that in the wake of what we saw on Friday, again, that kind of mixed reaction, the both ways, we're not totally sure what to make of it. We got out of the jobs report. I think coming into this Monday, and we always get the strategy notes out from our friends on Wall Street on Sunday evenings, where their heads are at around this idea of we know what's going to happen next with the Fed, and we know what, in theory, that should mean for the stock market, but it doesn't seem like full commitment from the strategist community right now.
Right. Wall Street can't decide if it's bullish or maybe a little bit more cautious. And we have a variety of Wall Street notes out there that say, look, Fed rate cuts are going to be a good thing for stocks. Goldman Sachs strategist David Kostin, he is very bullish on the long-term outlook. He thinks that rate cuts will mean the rally will extend into small caps, which has really been an undervalued part of this market. But then you have others that aren't quite sure. Ed Yardeni, he argued that rate cuts are not needed in this environment where you have productivity gains from GDP really solid at this point. He actually warned that a rate cut right now could lead to a market melt up, especially at a time where we could be cutting into an environment where inflation remains sticky. So there is a bit of a trepidation among strategists when it comes to what ultimately rate cuts could mean for the longer term outlook of the stock market. You were just saying that stocks are at record highs. A big reason for that has been the AI trade, but then you have this tension of how concentrated we are in the AI trade. Torsten Slok from Apollo Global, he called that out, saying the market has never been as concentrated as it is right now, and that risks fueling a potential tech bubble. You have Data Track Research saying that the AI trade at large looks a bit wobbly. We still don't have record highs for NVIDIA and Microsoft. We haven't seen those in weeks. And then you see some other non-AI related names like Apple catching a bit of a bid. And when you have a stock market that's really been propped up by these AI names, what does that mean throughout the course of 2025, how we end the year? So it seems like rate cuts are not a done factor when it comes to fueling this stock market higher here. So there's just a lot of overarching risks that strategists are calling out. And I think you can see that in the trading that we saw on Friday when we saw that initial spike and then a bit of a pullback where investors were trying to assess what this means.
That was a good inadvertent sentiment check there, Ali. We've gone weeks without record highs. How could we? How could we go weeks without record high in NVIDIA? Larry, before we get out of here, I want to get your thoughts on another way to talk about rate cuts and a move that I called a stealth move in housing stocks. I'm curious how you think about it because we've seen quite a move off those April lows, particularly in home builders, and the housing market has not had a good couple of years. I think a lot of optimism that maybe these cuts gets it off the mat. Curious what you're seeing there in the charts.
Very strong in the home builders. So what we've seen since July 1st, there's been a really strong rotation into rate cut beneficiaries, home builders, small caps, even biotech and solar, regional banks, things that benefit from rate cuts. With the home builders, what you're seeing is a long-term trend reversal. You've got a weekly uptrend on the charts. They recently reclaimed the 40-week moving average. You've got stocks like DR, Horton, Toll Brothers that are breaking out. And the market has moved into these home builders really over the past 6 weeks or so, 6 to 8 weeks, based on these Fed rate cut expectations. And historically, once the Fed starts to cut rates, and I know they've cut rates before last year in the cycle, but once they start to cut rates, they generally don't just make one cut. There should be a series of cuts. And the home builders have been leading over the past 8 weeks. And as long as we get the expected rate cuts, I would expect these home builders to continue to lead. Very strong charts.
All right, Larry, Ali, and Inez, stick with me. Coming up on the other side of this break on opening bid, we'll have our stock of the day, a company set to make its S&P 500 debut in just a couple of weeks. All right, let's turn now to our stock of the day, and that is Robinhood. The stock trading higher early in the session, up 13% after it was announced late Friday the company would be added to the S&P 500. The company will join the index at the opening of trading on Monday, September 22nd. It will replace Market Access Holdings. AppLovin and MCore are also set to join the S&P 500. Those stocks trading higher in the early going as well. But let's stay with Robinhood. Still with me, we have Larry Tentarelli, Ali Canal, and Inez Ferre. Inez, I want to turn to you on the question of Robinhood and really what this stock means for kind of this point in the rally. We've seen the retail trade, the meme trade, as it were, come and go a few times. Most recently, Open Door, a few of those names over the summer. I know you've covered retail traders, the meme trade, very closely over the last few years. It sort of feels like a crowning moment in a way for the entire movement with Robinhood. Coinbase, we had it earlier this year, added to the S&P, and now Robinhood joins as really like, this is a real thing. This is not just a joke, a gag. This is a major part of the market that we certainly all collectively watching markets, discussing it, take a lot more seriously as part of the daily story and I think the longer term story as well.
Most certainly, and some analysis I've seen is that Robinhood has gone from a YOLO app to a mainstream app. So it certainly is a crowning moment for Robinhood as far as also it's a lot of its revenue coming from crypto trading. This is also a validation, an institutional sort of validation when it comes to crypto. I also saw some interesting analysis on the fact that strategy was not added. So strategy was snubbed from the S&P 500, Robinhood taking the crown here. So this kind of also gives you an indication that, yes, Wall Street is very much embracing crypto, but not to the extreme of sort of a risk, the high risk sort of position that strategy would come with. So it's an interesting nuance there as well. But look, this is a stock that has had a remarkable run, 190% up year to date. Wall Street is increasingly bullish on this stock, not just because of crypto, but also because the company also has been expanding or really making a push to expand beyond, of course, crypto trading and diversification, tokenization that they're getting into. Wall Street's very bullish on that. The fact that they have been also expanding into the European Union as well. So I remember when this stock was in November of 2023, was trading at around $8 a share. And Wall Street was talking about Robinhood as being a potential target. It has had a remarkable run since then.
It went from what, 60 to 8, something like that, between 2021, 2023. I remember it is remarkable to see that run just in the per share price. Larry, I want to get your thoughts on Robinhood, but really two different parts of this. One is how you're viewing the retail trader, that participation at this point in the market. It's been a few year story. And then also how you think about crypto within the context of the modern market, where we discussed gold earlier in the program. It really seems to be finding a way, crypto is finding a way into portfolios of all sizes, and how that bid shapes flows certainly matters these days.
Sure. So Robinhood, very interesting points that were made before. So Robinhood, over the past 12 months, they've earned $1.8 billion. So they're a real company. They do represent, I think, the retail trader. And as was said before, Robinhood used to be considered a meme stock, but they're a serious player in the financial services industry. And I think that although the retail trader may have been at the forefront for Robinhood, I think that there's a lot of higher end traders that have also moved into it and investors. Robinhood offers a lot of benefits. They've got 24/7 trading in a lot of stocks. I think they've got over 30 coins that they make available on their website. So as far as validation for the retail trader, I think Robinhood is a big win. They're a solid company. They've got strong earnings growth. They've got strong revenue growth. And the chart's very strong. I mean, we can see it just consolidated off of new all-time highs. It reclaimed the 50-day moving average today. And it's a very strong leader in financial services. I'm bullish on the stock. We've had a position for a few months now. But I think it really does validate that retail trader in the market.
All right, and it's time now for our question of the day, and that is, will you be getting a new iPhone? Apple is set to unveil the latest update to its iPhone lineup on Tuesday. We're now up to version 17, and those are set to be a new iPhone Air, which is expected to come in about 30% thinner than current models. Wall Street also expecting Apple to raise prices on its latest iPhones. Ali Canal, I'll go to you. You can decline to answer on whether you get a new device or not, but you said something earlier in the show that was very interesting, which is, Apple not really participating, not really a member of the AI trade. Really no AI thesis there, and I think it's interesting coming into what appears to be a pretty exciting product release. We all cared a lot about what the physical phone looked like many years ago. That's the story coming into tomorrow's event, and not really a part of the AI trade. I'll be curious to see if they sort of try to make that case at all.
Yeah, and personally, I don't think that we're going to see a big rally in the stock off of this announcement unless they do go in and make further inroads in AI. Now, it's interesting because Bloomberg is reporting that Apple is working on a rebuilt version of Siri, so an AI-powered search feature that basically has Siri act like a ChatGPT type of voice to answer a lot of your questions. Will that be enough to satisfy investors? I'm not quite sure. We know Dan Ives, friend of the show, Wedbush analyst, he continuously has been preaching for Apple to go and buy Perplexity. But Apple isn't really a company that goes out and does major acquisitions. And typically when it comes to innovation, they are not at the forefront there. They come in later and then make a better product. So we've just been slow on the AI trade at large. In terms of whether or not I'm going to be getting a new phone, I mean, I don't know if you can see, it's cracked everywhere. So the fact that it's thinner makes me a little nervous because I drop my phone constantly. So does that mean it's indestructible? I really need a more durable iPhone. So that is something that I would be asking the company to do. But in terms of the trade at large, I'm not sure if just another iPhone announcement is going to move the needle here. We need to see some AI advancements.
I mean, maybe you just go get a company phone, and then you don't have to worry so much about whether the case integrity. Larry, quickly, I want to get your thoughts on Apple just as a company within the context of this rally. Was the biggest company in the world for some time. It's now lost that crown. It's behind NVIDIA and Microsoft. Stock's really done nothing this year amid, a tech trade that has dominated the market. And all things considered, as a collective, tech has acted very well. So I'm curious what you make of Apple being a relative laggard there.
I agree with Ali. What's held Apple back is they really don't have an AI strategy. Siri is not ideal whatsoever. I've got an iPhone. I use Siri. It's very frustrating. ChatGPT and some of the other AI tools are much better. So I think if Apple could step outside the box and acquire a company that's better in AI or really, really upgrade Siri and the AI, that the stock would make new highs. But if they don't do that, it could continue to just trade around and be a bit of a laggard versus the AI trade.
And, I always like to notice what companies put in their earnings press release. And Apple, for some time, they don't give a ton of information in the press release, but they're always talking about the dividend, and they're always talking about the buyback, and that phase of the company's life at this point. And as I'll give you the last word, quickly, new iPhone Air, where we at? I know you've got a small child at home. They love phones and they love dropping them.
They do love phones. I'm due for a new phone. I will be asking the company for an upgrade on that. And so if they give me the slim one, great. That would be great. That would be great next year. But it may be a precursor to a foldable. So that I think is very interesting. But yeah, AI is certainly what Wall Street's watching with Apple.
All right, Larry Tentarelli, Ali Canal, and Inez Ferre, thanks so much for stopping by on Opening Bid this morning. Coming up here, Yahoo Finance's Market Catalyst, Jared Blickery in the anchor chair this morning, bringing you the latest on the biggest in markets to get this way under week. We've got the S&P 500 and the NASDAQ higher, Dow, a relative laggard as we get the trading week underway.